Well, hello everyone. Hey, it's Shooter. Hey, we're going to go over swing trade notes tonight. Of course, at the end of the presentation, please review our disclosure. You know, one of the crazy things in life, sometimes we need to reflect on history just to, keep us humble to some degree, especially when we look at the euphoria that's coming to the markets, and a couple of the folks that I follow were posting a lot on 1920s, 1929, and, what was going on then in the bond market and the spreads. And, we're at this crossroads. And this beautiful graph of, from Bank of America. Actually, one of the folks I follow on Twitter, Wifey, posted this particular chart. I snatched it from him because I thought it sort of perfectly illustrated the dilemma that I think I face as an analyst, because until this bond issue gets resolved, I don't think we're out of danger here. And, if we look at the history of events that have occurred, we have obviously 29, 66, 73, 79, and February 07. And all of those, we had significant drawdowns. The 1929 drawdown was 13% in one day. So I wanted to sort of bring that in, just so we are humble in our positions and how we are scaling in. And we always have a thought of protection and what we can buy as protection, and we've discussed that in other videos. And obviously I think keeping some form of puts, a small percentage as a hedge, and then any news that the market is going to shift, then we want to build on those positions, to obviously try and insulate ourselves from any drawdown. So now on Saturday's video, we looked at the VIX, and I really can't say whether it's between now and March of 2024, but I do think it's probably in the first quarter, where we have that free drive look that I had spoke about. So, it's going to be very challenging to push long. So let me just say that. So not only with the events going on in my personal life, I'm going to be light probably through the holidays. Maybe jump back in a little bit after Thanksgiving, but we're going to be a little light, that's for sure. But looking at the dollar, we did come off today, and we had a little follow through in the markets, but we didn't really have an aggressive rally. So, right now our target's 102. So that's going to continue to weigh as, a tailwind on the indices. So, I do think that all the forces in nature are coming together where we have a little bit of a bullish run here. So, however, it's still challenging with the history of the bond market to say, hey, go 80% or go 90% or go 100%. I would be very conservative in my positions to the upside. Now, after my chat with Kirk over the weekend on TLT, I tend to agree with him. I do not have a position in swing trade notes on this yet, okay, but I do like the January 110 calls, 2025. They were $1.89 when I looked at them earlier today. And at this point, I'm not scaling, but I will probably start scaling into those, cost averaging into a piece there. I just need to break it down on a piece of paper and decide how I'm going to do that, thinking that we still go down to 80. Right now we still have a target of 91 on TLT before we start our primary wave 3-leg lower to 82. Then we bounce again. So it's going to be choppy. So, this goes all the way out to March 24. But simply the fact that Kirk was discussing when the Fed makes the change, it's going to be a one-off event. That's very difficult to predict. Sort of like I was chatting with Teresa in chat about the copper futures and, when historically China has bought those, looks like they like to buy in February. So, maybe we'll put a long position on in copper going into the second week of December in anticipation of that. But we still have to structure the trade for February. Same case here. We would be looking probably by mid to end of the first quarter, maybe even into the second quarter, before we bottom in TLT. So, of course, structuring your position there is going to be challenging, but I do think the upside is there. So maybe common shares, sell some cash secured puts down here on R2 for like an $80 strike. I don't know that I'm going to sell cash secured puts. I think I'm just going to buy some 110 calls and focus on that and building a position there. And I think January 25 is far enough out and they're cheap enough right now at this point where I think there's significant upside on those. So that's my thought on TLT, or that's the plan. Now, the one long that we have on here is pins. We have 34 and 35 January calls. calls. We covered the 31 and $35 April calls, on that last run, for just a little shy of a 60% gain. And then we rolled into January 34 and 35 on the drawdown there a little bit. Still looking for 40 on this. It might take a little reason we're so far out still as far as time is. I think it might take some time for us to get up and out of here, but I think it's very productive at this point, especially how we keep back testing the lows and testing the highs. It definitely is acting to me like it wants to get out of this flag here. So that's the thought pattern on pins. Now, Tesla, I want above our 226.82 to jump on another piece. We took some longs at 218, I think it was 78, something like that. Took some 220s, and held those right to about 225 today. And then we covered those. So hopefully after, typically Tesla likes to flush in the morning. So I'm going to look at where the lows are tomorrow and decide, how and when, if I'm going to enter again tomorrow on those longs. But this really is my thought for this week, as far as a swing. And, I'm just looking at, January 240 calls is what I'm thinking at this point, simply because I think it's a safe bet. Our strike 3 on our minor wave is up 258. We're about ready to have that breakout here. We've got a gap over our head at the 50-day at 241. So, those 240s will be in the money there at 240. And then if we can let some of those run up to 250, should be a nice trade. So looking at the Russells, it's still a short for me. I think now that we've maybe one more candle up, maybe by Wednesday, then maybe we can start looking at 165. And again, I'm going to look at January to March 165 is sort of my thought. I'm building that out again. CBRE, definitely still short, looking at 65 and 70s. I tend to be methodical in revisiting. I tend to trade the leg, get my $5 or $10, mark my profit, and move on. Now I think Airbnb, into the end of next quarter, I think it's a little further out, but just with how we've traded with the rally in the market, we got a decent candle back up to the upside, which was our T2 target. Our T3 target is way down here at 68.64. The way we laid that out, and our intermediate wave 3 is down at 100. So, I would focus probably in June or July, if you don't have anything on 100s. Maybe go to some 105s. Reason is they're pretty cheap still. It's still, I can't imagine that the Fed comes out and finds some way to bail Airbnb out. I think as the rates continue to climb and consumers continue to get squeezed, I think the Airbnb rentals in the mass market area just get squeezed in some markets. And I think their revenues decline from that. And once that starts continually hitting the P&L, it's just going to drop off a cliff here. And then, our 5 is way the heck down at 65 down there. So, that 68 is a pretty safe spot down there. Looking at the SPY, we're at trend resistance right now. So, count suggests we're going to 485. I'm just going to leave it there. We're bullish. I started off with this presentation about 1929 and the bond market. I wanted to make sure that everybody has that in the back of their mind when you're putting a position on. I'm still going to suggest that we're conservative. Now, I had to go out to the weekly because the daily didn't give me any visual that he suggested. To really get a visual of where we potentially could go here is 476. Again, with some kind of ceasefire or remedy in the Gaza Strip, and the Fed, basically pauses, then we have a catalyst, so I think going into the first quarter is where we're going to really see the pop. So we might chop around here, both in the NASDAQ and in the SPY, so, maybe we put our head up, drive 1, drive 2. So I look at drive 3 so be an overshoot, maybe we back test and that trend support holds, is sort of my thought. But we got a breakout line that's going to come in here. I actually don't have the label there. Let me see where it's at. It's about 376 something. The breakout line. Oh, excuse me. No, it's going to be about 379 is where the breakout would occur. We could get some euphoria there to the upside. So especially with the flow that we've seen going into the Magnificent Seven, that is something that could be a catalyst to push us up and out of here. And we get a new high. I do think we break out at some point, but I would rather have a back test of the 200-day first. Be very candid. We would have much more euphoria to the upside, less chop. I don't like chop, and right now we're in this choppy market, and I would like that to change, but that doesn't necessarily mean Mr. Market's going to give it to us. That's for sure. So, all right, looking at the quantified cryptos block here, got a little bit, I mean, not an aggressive. BTC is down about 1% from its tag of 38. Now, the one thing I want to emphasize is that Bitcoin went right to 38.00, which has historically been a top. Okay, the count doesn't support that at this point. We entered in a position this weekend in XRP. I've got a cost average of like 166.9 or 66.9 or 89 or whatever that number is. Ethereum is the only one that stayed green. And that could have been off of the JP Morgan news, because realize their JPM coin runs on the Ethereum network, even though it's a private section of that, which I posted in chat, by the way, for you all to refer to. Just trying to keep you up to speed on what's going on. I haven't looked if I can even buy any of that or not. But Bitcoin, we're putting in this inside day. This could be our 3, and we could back test for our 5. That may mean our 5 comes back down a little lower, 35, 34.9, somewhere in that range. Could be, because we could lower here if we start to win. But that's still a nice flaggy look to me to the upside. So looking for our intermediate wave 3 around 39, 113 with a back test of maybe 37. And then we head up towards our 41. So as long as this 100 fib doesn't break, I don't think that count will change. We do have a confirmed high and a divergent high. So this is a 2 drive. So on this 3, we should expect a back test, okay, which is similar to that 37. So that's something that I would say is pretty much etched in stone. It just depends on really where our high is. And our 3800 tag was here, and I can't move this chart around to show you, but on other historic highs, we've had even numbers as well, and other historic lows. It hasn't occurred in every instance, but we've got a nice breakout here, and just something tells me the top's not there, though. That's just my thought. So we might grind out here a little bit before we head a little higher, sort of my thinking as well. Looking at GBTC, we're at 29.97 as I printed this. I'm looking for 30, 40, and then we pull back to about 29.15. Not a deep drawdown here, but when we do put in our primary wave 3 around 31, we get a back test about 26. Now, I've not made the decision yet. I probably am going to scale into micro Bitcoin futures, and I'm eyeballing, in the money January 25, just so I can capitalize on the upside. That way I can take smaller pieces, and I don't necessarily have to put that much on now. I can cost average in over the next 3-6 months, for that next leg higher. However, I may still keep a position on with GBTC, but I do think there's a risk here of a sell the news kind of event once the spot Bitcoin ETF gets approved. So I want you to keep that in mind. And, 50% back is viable. We started talking about getting approved here in late July. So, that's our run. So 50% back maybe could take $8 or $10 off of that 29 where we're at once we do get that high in right there. So, keep that in mind, whether or not you want to keep that on the table at that point. But I do look at GBTC as a long-term position trade. So whatever your allocation is, if you're at 5% for the position trade and you've got another 5% in GBTC because of euphoria, maybe at that 31 we trim and then see where we land from there. Because you can always buy it back. It's only a couple bucks to buy it back, unless there's some tax implication there, of course. So, all right, jumping over to Ethereum, we got a breakout again, above that breakout line, right at that 23.6 fib. I don't have that high highlighted, but we should get a little back test and ultimately head up towards that 2777, excuse me. Then we get a decent drawdown again. So, it's just going to build out that leg. So we've got a new count on XRP. It was ironic. I had to go in and I rebuilt the chart from scratch. I don't know whether it was a data glitch. I don't know what it is with data lately. Data just doesn't seem to be as clean as it used to be, or that's just me. I don't know. But we now have a target of 327 on our primary wave 3. And when I ran this, we were at 67.24. I think we do have significant upside. So I'm cost averaging into this. I'm taking a percentage of my gains every week and rolling it into this. Basically, I'm just taking the percentage that I was allocating toward GBTC, and I'm going to break it up, and I'm going to do micro Bitcoin futures and XRP and Hive and Bitcoin. That's where I'm going to break that up. And that's what we have for this week, folks. Great trading. I'm going to end here for the public vision over and cover some other symbols for members only. So have a great night.